Welcome again to the Cannabis Investing Podcast, where we speak with C-level executives, analysts, and sector experts to provide actionable investment insight and the context with which to understand the burgeoning cannabis industry. I'm your host, Rena Sherbel. Okay, we've got the Verano team on the podcast today. We've got Verano founder and CEO George Arcos, and a friend of the podcast who's been on before, Aaron Miles, the Chief Investment Officer. Welcome to the podcast, George and Aaron. Thanks for coming on.
Thanks for having us.
Thank you for having us.
I'd love it if you shared with us, you're fresh off a pretty nice earnings call that investors are dissecting as we speak. Give maybe a line or two about where you're at with Verano and in general, how you're looking at the cannabis sector, just broadly speaking.
Where are we at with Verano? That's a good question. I mean, we just came off the queue, so we let everyone know how excited we are about the industry. Probably the most optimistic we've been in our 10-year run here. This is our 10th year in cannabis, so it's a very monumental year from all different types of perspectives. But and the biggest thing, and Aaron can touch on this, is obviously, everyone on the top of mind is DEA, DEA, DEA. I think this could be the year this should be the year where we get our big break, right? And cannabis gets that push that it so deserves. And from an industry perspective, from a business perspective, Verano has never been better. We're in 13 states. We have so many positive things happening on the horizon. The transition in Ohio from medical to adult use. We believe that PA is poised to do the same thing here in the near term. And Florida's ballot initiative this November is looking very good. And those are three massive states in the U.S., all of which that we have very good footprints in, and more important, great teams that are ready to make the transition. So very exciting times for us.
Yeah, and I'll just say this, in my role, a lot of my focus is on the capital markets side of the business. And, for us, we're constantly trying to position ahead of, any types of opportunities that are going to present themselves. We'll say when now, the federal level continues to make progress on, getting rescheduling, kind of across the finish line. And that includes, preparedness for, the uplisting into the U.S., into one of the big three exchanges, which includes, we listed last year under the CBO Canada, gives us senior exchange status, listing status. And then, we're also ready from, an accounting and finance perspective. But as George mentioned, it's just a really good time to be in the space, and we all need to really focus on the positives that are in front of us.
Yeah, there is a nice amount of positives in front of us. In terms of, George, you put it like it should be, and that's a lot of what we hear in the industry over the past few years when it comes to regulations passing and the DEA notwithstanding. I wonder how much you guys are pricing in kind of regulatory measures passing or federal picture looking up or uplisting, as you mentioned, Aaron. Aaron, I don't know if you want to start, but how much are you planning for regulation improving? And let's say, for instance, you guys are paying your 280E taxes, and how much are you not figuring for those measures passing?
Yeah, I could start and I'll, let George, chime in here, from, a capital markets perspective. Again, we've been very clear, and this isn't what you're insinuating, but, we've never run the business based off of assumptions at the federal level or moves at the federal level, but you still have to prepare for it, right? And so for us, you look at, we've had a history of staying a step ahead of opportunities. It started in Illinois when that flipped over to adult use, and into, New Jersey, Connecticut, Maryland, and, Florida is on the horizon, which is the biggest out of all of them. And I'm sure we'll touch on that in a bit. But, when you actually think about what rescheduling can mean for us, you are right. 280E going away is probably the biggest near-term catalyst for our business, to the tune of, of over $80 million would drop to the bottom line if 280E didn't exist in our world. And so for us, the focus is on making sure we don't miss any of those opportunities. And again, I touched on it with, the capital markets aspect, but another big thing, and then, I'll make this comment and turn over to George, but it's just being able to operate like a normal business, right? Like we can't accept credit cards, you can't advertise, you can't bank at the federal level. And it can become very cumbersome to have, 100 plus, state chartered bank accounts to make, meet the covenants and continue to manage those through. But, I'll turn over to George and let him chime in as well.
Yeah, Aaron hit most of it. I mean, really for us, we've always operated the business as if nothing is ever going to happen on the regulatory front and the federal level. We've always focused on state level changes, mostly being new medical markets, medical to adult use. And those have been really the catalyst for our industry thus far. That being said, it looks like we're going to get the bounce here that we've all been waiting for and anticipating. And a lot of people are working hard on it, including all the politicians that are putting in the various bills. The era of positivity around cannabis is real. It's been growing year over year, and I think we're at the culmination. We're at the peak here, where if the DEA gets this rescheduling done this year, then you could possibly see safer banking and some other things added to it, and the dominoes just start falling in our favor, as they should, because as more people realize the benefits of cannabis, they become undeniable, and access should be given to everyone. So it's a good position to be in, and we're very fortunate to be right in the middle of it.
George, let me ask you, given the possible favorable federal changes, but also specific to Verano, and you mentioned the 3 states that you have coming up this year that people are saying are likely to be converted to adult use. Do you feel I've noticed that you've been making kind of the media rounds and the podcast rounds, and I know that you don't typically. I'm curious if you feel like there's a lot of good news to get out in front, and now is the time to be more public facing or forward facing. Would you care to share, kind of articulate your thoughts about that?
Well, for the past few years, it's been very, ho hum, right? Although our business has been doing fantastic and we continue to build on our foundation and the people that we put together and all the things, the processes, the brands. Really, a lot of the talk is always, where's the crystal ball and what's going on with SAFE and what's going on with it. It's always about federal questions. So for me, I have to focus on the business, right? I mean, we have a team within Verano that focuses on DC, Aaron being part of that. So there was really, you know, uh, uh, I did my part. Now it's, their part's coming up obviously here with the DA rescheduling and Safer finally getting some traction and some other things. So while people are listening, it's good to be able for me to come out and talk about operations again while people are paying attention because they're tuning in because of the DEA news, right? So that's why I'm making more of my rounds. So people realize that, we're still here. Verano's doing a fantastic job, real cash flow, real growth, catalysts ahead, fantastic people doing a great thing. It's what we preach all the time. People, process, product. The business is there, and this is just something that's going to catapult it into the stratosphere. So it's a good time for us.
And one of the things that's certainly going to come with more federal regulation, or any federal regulation, is going to be more transparency in the filings. And that's something that you've gotten positive press for. You've gotten it on this podcast from Can Investments. Jerry Daraviani was on here talking about the need for companies putting out their state-by-state data, and you guys are one of the very few that are doing that. Talk to us about how you think about being transparent in terms of sharing that with retail investors, and if there's anything that we can look forward to kind of coming up in that regard.
I'm sure as time goes on, we're going to share more information, right? Various KPIs, store level data, more granular things. You have to do that as we continue to grow. That was the first push, and Aaron and Darren spearheaded that. They've done a great job, and it's been received very well. But there will be more to come, right? But right now, our focus is really these next 3 markets that are coming online from an operational perspective, and obviously in the DEA front, getting ready, right? Aaron spearheaded the SIBO move, which we're very happy with. We're getting ready. We're a SOX filer now. We're done. We're doing all these things on the financial front, the regulatory front, to be ready to make any type of change over to NASDAQ or NYSE if and when that occurs, and really just being prepared. And that's we feel we're in a very good position right now. So we're going to keep trudging forward with a smile on our face and executing at a high level, and good things will come.
Yeah, and I just want to add one bullet point on that transparency that George was talking about. If you think about what we're going to be auditioning for down the line, right? You think about the opportunities that we keep alluding to here. When you think institutional dollars coming in, they're going to want as much information as they can. And so, when a buy side analyst is putting together a model, they want to have faith in the numbers. They want to have faith in the company. And, you want to be as transparent as you can to your investor base. So obviously it helps on the retail side, but down the line, when you have big institutions that are looking at the space as well, we want to push the envelope on that transparency because it'll help on that front as well.
How do you think it best serves retail investors to be looking at companies? Would you write off a company that's not trying to be ahead of the game, let's say? Like, what would you, and I'm not trying to, cast aspersions at any other company or throw daggers, but I'm curious why you think maybe more companies aren't out in front. Is it because they shouldn't be? They can't be? Is that something that retail investors should be looking at more closely?
I mean, I could start off and Aaron can answer. I don't want to speculate. That's not what we do here. We concentrate on our business. For us, something we always talked about is we have a very well balanced portfolio, right? So we have revenue coming from different states, which kind of hedges our business, and it's important to us. And showing that to our investors, we thought was very important. So you can see that now, right? And you can see where we're gaining or where we're losing, et cetera. And it helps us focus on our business, and people can understand that it's not just words coming across on an earnings call. Like we're making positive results and we're doing different things to grow the business. And it just makes sense for our shareholders to be able to see that. Now, as far as everyone else, I'm sure sooner or later everyone will follow suit. But again, the why and when, that's not our job to say.
Yeah, and you don't listen. It's tremendously hard to operate in this space, and again, I think one of the things that sets us apart, and this is something that George, really established early on, was, staying a step ahead of growth, but not too far ahead, and always making sure that you're well positioned ahead of opportunities. And so we don't have a lot of catch up to do. Like, DEA stamp of approval comes in to say capital markets open up. We don't have to rush to become an SEC filer or get our S3 filed, or, become more transparent in that matter. So it's not to say you dismiss a company that it hasn't been doing that, because, everybody should be applauded for operating well in the space. It's just, we feel that that's what has separated us is, the level of, planning that we've had, around some of these moves that we've made.
A couple of the highlights of your earnings report were margins and cash flow, which are two metrics that have been talked a lot about, I would say, in the past year or two in the cannabis industry as metrics to focus on in terms of where to allocate your funds as investors. Are both of you, or would you each share what metric you're focused on, given your respective roles and lanes? I'm curious if there are similar metrics, if there are different metrics, and what you're focused on there.
Good question. I mean, I'm always a bottom line focused guy. So we always ran the business to be profitable and be able to use our cash flow to continue to grow the operation. It's something we've done from day one. So to get back to that now on this large scale has been great because it gives us optionality, which for me is very important moving forward. Subsequent to the quarter, we paid down 51 million to the Chicago Atlantic debt facility that we have, and we have the option to pay off the other 50 million with no additional prepayment penalty. That was important to us. We have flexibility on our CapEx spend based on the new markets that are transitioning to adult use and any new M&A activity that we're looking at or might transact on in the future. So optionality is, it provides you opportunities. And for us, being cash flow positive in a big way was always a very important thing for us, very important goal.
Yeah, we made the push last year to really try to shift the focus from EBITDA, right? That was always the metric everyone looked at to free cash flow. And in 23, we produced $73 million of free cash flow, which was in line with our guidance and also tops in the space. And in Q1, we produced $21 million of free cash flow. And while you can say you want to produce as much cash as you can, there's also a balance between trying to drive that number, but then also investing in certain opportunities. And, Florida, a potential flip to adult use in Florida, as an investor of Verano are going to probably want us to run free cash flow as zero as we can get, because you're going to want those dollars invested into that state. So it's really hard to say what metrics to focus in on because there's so many ebbs and flows in this space. But really the bottom line, if you're not making money, you're just going to go under. And I know it's a very, very, logical response there, but it just is what it is.
Cliche because it's true.
Yeah.
Am I right? Yeah. So speaking of those three states, Florida's getting a lot of press. There's pretty great reasons to be excited for that passing. Ohio is getting pretty nice press. Friend of the podcast, Hirsch Jane, was talking about, depending on when it passes, maybe that hits 200 million a month in Ohio. Pennsylvania. Would you share why you're so excited about those three states? And then also what happens if it doesn't go according to plan?
Sure. So, I mean, the reason we're so excited is because they're massive population centers, right? All double-digit, multi-million person populations. And then with Florida, you also have this massive tourism population, which is something we've never really encountered, right? Like Nevada gets a good tourism population, but Florida's on a different level. So that market, where we normally see a 2.5 to 3 times lift, it has the potential to be something far greater just because of the tourism numbers. So that's a very exciting one. And then the others, Pennsylvania is similar to an Illinois in size. We have 18 stores there plus the cultivation facilities. So we're in a good position to really expand our sales there, and a 3 times lift would be significant for the company. And same with Ohio. We have 5 stores there. We have the cultivation, not as big of a footprint because we're not allowed to have as big of a footprint, but it will be a significant jump. Um, so those are big catalysts for Verano, right? And when you already have the people in place and you're just seeing a massive influx in business, the profitability is real. So for us, it'll give us additional opportunities and flexibility in the future with all that additional revenue and cash flow to the bottom line.
What if it doesn't pass, let's say this year? What if the measures don't go through?
I don't think that way. They're all passing. It's all good. Oh, that was on the books. No, I mean, listen, PA, it's been in the governor's budget for 2025. We're doing a lot of work there, as are others. We feel very confident about it. There's not a big CapEx spend for us, so whether it goes or not, that doesn't make a big difference. Florida, on the other hand, we're well established there. Historically been one of the top 3 players. There's going to be a CapEx spend there, but a large portion of it is something that we have to spend anyway, just because we're coming up to maxing out our current facilities. So we're going to have to increase. And if for some reason, I don't think it will, and I'm staying very positive on this because the polling looks good, we have to stop. We can push pause, and we'll be comfortable with what we spent at that time. So positive all the way around.
Appreciate that. Aaron, any thoughts to add there?
No, I mean, I think George, I mean, obviously George is right on. I mean, it's, you prepare for these to, kind of transition, but, the tide's shifting in the right direction, and we'll be ready to go. And just to reiterate, what we said earlier, it's like, if you look at, the most recent states that really flipped to adult use, from, Illinois to New Jersey to Connecticut to Maryland. I mean, we've been a leader in all of those states, and you can imagine, as Ohio transitions, and Florida and PA, make similar moves, that will be ready to go.
Do you have your eyes on other states or other regions?
We're always looking at every opportunity. So there's still places that we want to be. There's still markets where we can go in deeper. So there's a lot going on always. It just has to make sense for the business at the right time. So we have a big team. Everyone's focused, determined to win, and a lot of possibilities ahead.
Like, markets also transition, right? So you think about what we were doing early on stages of, like, New Jersey. We were 3 of 19 adult use dispensaries that turned on. And so, of course, you're going to focus a lot of your attention on running as much product through those stores, and generate as much of the bottom line as you can. And as more dispensaries have come online, we've had to shift our focus into that state, which really resonated in a wholesale increase from Q4 to Q1 of 14% in New Jersey, as we really started to develop more wholesale account relationships. So, it's not necessarily going deeper at times. It's also the transitioning of a market and making sure that you're staying ahead of that as well.
And does that also go hand in hand with looking at distressed assets, or not even that distressed, but just assets that are viable ones to pick up at this point? How are you thinking about that side of things?
Like I said earlier, we're looking at everything always. There's never a dull moment. There's a lot of opportunities out there, but just because distressed asset might be available doesn't mean it might make sense for our business, right? So we're looking at every opportunity, and we're a very acquisitive company. We've done a lot of deals, but they have to be right for Verano.
Do you have thoughts, broadly speaking, on consolidation coming up this, let's say, in the next 12 months? Do you have speculative theories on how that might look? Do you foresee a lot of consolidation, or do you foresee a lot of waiting to see how things shake out further?
I think there's going to be a little bit of waiting for a period of time. If when the DEA reschedules, I think that'll probably kick off an M&A campaign. But we'll see.
And do you guys have, I know that this is like a crystal ball question and it might not even be worth asking, but just curious, do you have a sense of, does uplisting quickly follow the federal regulation? Does that go hand in hand or not necessarily? Or crystal ball question, who knows how it's going to look?
Yeah, it's a crystal ball question. We don't think it goes hand in hand, but it's definitely a positive step towards it. You know, Aaron can clarify further, but go ahead, Aaron.
Yeah, I think listen, first and foremost, it's getting the reclassification done and safer and maybe safest at some point banking can be down the pipeline or the Garland memo and have some banking protections written in there. But we've stayed close to the exchanges and we've stayed close to lending institutions and institutional investors and everyone's kind of waiting for some of those protections to come in place. But Schedule 3 alone, at least the way that it's characterized to us right now, wouldn't necessarily just open the floodgates for banking. I hope I'm wrong, but it also doesn't mean that there's not going to be something in conjunction or in the near future to follow that movement.
And what has each of you most worried? Is it the federal picture? Is it regulatory measures? Is it institutional interest, institutional optionality? Is it the price of cannabis? What do you feel like lends itself most to the volatility? And what is something that you feel like may be most in your control, certainly out of your control, but maybe something that you're focused on to the point where you feel like you want to make sure that it doesn't get too bad too fast?
I mean, listen, 10 years ago, there was very different worries from where they are today. I mean, sitting here today, we have a fantastic business. We have amazing people. We know how to run the business. We know what we're doing. Regulatory really is and always has been the biggest risk factor, but from where we're sitting today, very different risk from what it was 10 years ago. So we feel very good about where we're at. The biggest thing that most people, not that most people don't realize, they definitely see it, is it seems to be no matter how great we run the business, everyone's really focused on what's going on the federal level. So that's the one thing it's not that it's disheartening. We're going to keep running our business to the best of our ability and do all the right things to continue to grow. But it would be nice to get one of these things across the finish line, right? Rescheduling, SAFE Act. It would be nice to see something in the federal front to be able to allow institutional investors to come into the space and to normalize our business, right? I mean, we've done so many things. We provide so much positive benefit. We provide so many positive benefits across the country, employees, tax benefits, all different types of things, and we're not treated like a normal business. So it's deserved at this point, right? It's been a long road, and we really want to see something along that line.
Yeah, it would be nice for once to see fundamentals line up with what actually, is happening, and instead of just a lot of optics around headlines.
Right.
No, I would agree. And to George's point, I mean, I think a lot of this stuff is, you don't want to say a nuisance, right? Because you don't want to downplay it, but like worry, at the federal level used to be a really, really big concern. And now it's just kind of to everyone's point, you just want to start seeing some of these catalysts play out so that we can operate like a normal business and just be appropriately valued. I mean, that's literally all we're asking for here in the near term.
And I'm just curious your thoughts, because you've both been in the game for a while and we've seen a lot of promises around big states and we've seen that dwindle. Care to share any thoughts just for perspective or edification, specifically around New York and California, or how you think about the bigger states?
Aaron, you want to take this one? I mean, California's never been a focus for ours, but yeah, go ahead, Aaron.
Our MO from day one has been limited license, vertically integrated states where we could grab share in the medical market and position ourselves ahead of adult use. And, California just doesn't offer that. I mean, there's a massive illicit market that you're battling against. It's a very fragmented market. So if George, gave me a blank check and said, like, go into California and, grab some market share, we would have to execute on a ton of deals and take a lot of bandwidth and integration, and would probably barely, move the market share needle. And so California is a market that, we pay close attention to, and it's a market that we're probably going to sit back and watch to see if consolidation happens. But at this point, we're just focused more on those, limited license, vertically integrated states. And kind of same with New York. I mean, we had a pathway at one point, and we took a step back, and I think we're just kind of waiting to see how that market plays out. But I mean, talk about regulation getting in the way of a market actually flourishing. And so, they're obviously two big names, but in reality, we make more money in other states right now that are more limited license in nature.
And in terms of paying attention to the distressed assets in California, is that just to get a sense of the picture, to see what's out there, to see what the biggest market is doing?
I mean, yeah. I mean, you always have to keep your pulse in every market. I mean, you look at California, New York, but you also look outside the US. I mean, we have to understand how things are transforming. And, right now, you kind of see, cultivators going offline in California. You see less square footage. You see, kind of like a mini almost consolidation going on in that state. But, as I said, it's just more just kind of paying attention to it than anything else.
Any final points of light for investors, or that you'd care to share about earnings or just in general? Happy for you to do that now.
Anyone's interested, it's investors.verano.com, ticker symbol in Canada's VRNO, OTC tickers VRNOF. Would love if people listening in would stop by and look at our ZenLeaf dispensaries in the 12 states that ZenLeaf operates in. And if you're down in Florida, look for a Move dispensary down there. But, really just proud of what we're accomplishing. And
yeah, absolutely. We tend to have our eyes on Verano, so we look forward to what's coming. George and Aaron, I appreciate your time very much. Thanks for making it for us. Join me on June 18th in New York City for the first ever Seeking Alpha Investing Summit, a full-day conference offering unique insights and actionable ideas. You'll learn how to navigate volatility from top executives. You'll also be able to sharpen your investment skills with Seeking Alpha's most sought-after investing group leaders and analysts. The event is open to Seeking Alpha subscribers only, with a special offer for our podcast listeners. Enter the code PODCAST at checkout for a 30% discount on your pass. Learn more and register today at events.seekingalpha.com/2024 Summit. Thanks so much for listening to the Cannabis Investing Podcast. Subscribe or follow us on Seeking Alpha, Apple Podcasts, or Spotify. We'd really appreciate it if you left us a review on Apple Podcasts. It helps other investors find our show, and it makes us feel fantastic. If you have feedback or questions, we'd love to hear from you at RENA+CANPOD@seekingalpha.com. Nothing on this podcast should be taken as investment advice of any sort. And yes, I am still long. TrueLeaf, Chiron, Isercan Biosciences, the parent company, Air Wellness, and the ETF MSOS. Thanks so much for listening.